YouTube, what's going on? Welcome back to another inter-equity trading video. Today, we're hopping right back into that fan favorite series, Training the Eye. This is gonna be episode number 6. We're gonna be going through a trade on AUD USD. But before getting into the entries, I really went into depth on building that narrative, okay? Building that story and starting with that naked chart and actually using replay to emulate those live conditions as much as possible to train those eyes. That's what we're trying to do here. Is I'm trying to drill these concepts into your eyes to a point where you approach the live markets and it becomes second nature. If you guys like this video, please toss a thumbs up. It helps us a bunch. Leave a comment down below of what kind of videos you guys want to see from us next. Turn those noties on. We got lots more content coming for you guys. Talk soon. All right, guys. So I have in front of us right now AUD USD on the 1 hour chart. And you guys know the drill. I don't really want to switch between timeframes too much. The sole purpose of these episodes of this series, again, is to train your eye, a naked chart perspective, all the way up to a marked chart perspective. I want you guys to be able to look at these naked charts as per the one in front of us right now and understand how to mark up the charts accordingly, following price action, tracking that narrative from the beginning all the way to the end. Okay, so I have actually backed up price on replay mode right now to an important time, and we'll get to that. But first, I want to talk about price action over here. You can see how AU sold off, went higher here, printing this high in the market. From this high, we sold off, little pullback, and then a big continuation to the downside. From there, we can see we printed this new low in the market, okay? Taking out previous lows. From a common retail perspective, they will now view this as a BOS in the market. Since we have taken out previous lows, printed a new low, they've now viewed this as a BOS. Based off patterns, based off strategy and structure. Again, new low printed in the market down here, so BOS for retail. We need to understand that. That's very important because automatically I now know that there's going to be liquidity above this high. Eventually, because sellers are interested in selling below it based off this common retail pattern. Low taken, new low. Retail wants to see price back up at the high and they want to sell it back down. And as you guys can see, price actually ended up going bullish, took out the high. Why is that important? This, and we've talked about this how many times now, right? This induces buyers in the market. The importance behind us taking out this previous high is now buyers are interested in buying this market. So every time we get a reaction here, this is inducing buyers to go long. And we want to understand that because you want to be able to track this liquidity. So what can we see here? For a while, after printing this new high, look how the market respected this low once, twice, and actually ended up taking out highs. You can see that we built liquidity at this high here. I have marked out for quite a while, right? We have about 11, 12 hours of price action building liquidity at this high. Finally, we come up, spike it, and we sell off sharply. Zoom back out. All right, so again, we spike all that liquidity. We induce a bunch of sellers, trap them, and then we trade lower. Starting to sweep some of these areas on the left-hand side. Again, every single time we get a reaction from these areas, view it to be false. So look what happens here. Okay, and we're gonna track this. Price comes into this area on the left-hand side. So we grab all this liquidity from the left, price taps into this area from the left. This is when I want you guys to understand something. Any sort of buys coming out of this area, this red area from the left-hand side, if it goes long, that's fine. This is now known as a low probable move. So yes, there was a long that occurred and it was actually just over 50 pips. However, it's a low probable move. We do not want to be buying in a bearish market. Why do I say bearish market? We have taken out this high. So now, as per our system, our strategy, we know that we want price back down to the downside. So why would we be buying this market? So again, we're looking for sells back down. We get that reaction out of this area from the left-hand side, view it to be false. Any reactions out of here will literally just build liquidity at the lows for us. You can grab this low, okay, on a lower perspective, but overall, we do want price back down here. So we're going to plot that blue line on. Again, we go bullish. What was the intention behind this bullish move? We can clearly see, I'll zoom in a little bit more here. We can clearly see, look at this liquidity buildup we've left. Sellers entering the market in this kind of price action. Then we get that sell off to the downside. That tells me we're going to have liquidity where? Above this high. And look what the market does. We struggled down here for a bit. And then again, look at the struggling kind of price action even over here. 12, 13 hours, we couldn't break this high. Building. Finally, we go long. Perfect. Trapping any sellers that were shorting below this high. This is when you want to start analyzing the price action that we get out of that. Look at this. Build. What do I mean by that? Look at this kind of price action. We'll just put 2 lines on here to kind of represent a little bit of a channel of price action. Just like this. Build. Finally, we trap higher. Look at the sharp reaction out of that. What's the importance of this? We have taken out a low from the left-hand side. Now again, why is that important? It is important because now since we have sold off aggressively with speed, it's induced sellers into the market. Same thing over and over, right? Look at the volume. 1, 2 candles. 2 candles sweep out like, what? 12, 13 hours of price action. So this high volume move, taking out lows, induces sellers again. Why? They're going to be trading this kind of price action, remember, based off patterns and stuff. So a common pattern, a common theme is price sells off, takes out a low. So we're going to view this area to be a trap. Look what we got here. Same thing. So since we have taken out this low with speed even, high volume, view this area to be a trap. We want to now see price above this high. Okay, so now you have to understand this whole narrative we built, that we've been tracking everything here. Trapping sellers, big sell off to the downside, reacting to areas on the left-hand side, going bullish in a bearish market. This move, and this is very important, this move from low to high is now providing us an opportunity to sell back down. Okay, you need to wait for this kind of move to occur, low to high. And again, if we zoom back out, don't forget about this whole bearish narrative, this whole bearish bias to the downside. We want this low taken out. Why? Don't forget about this, guys. This high has been taken. So that's a BOS for retail. Automatically, there's going to be a shit ton of liquidity at the lows down here. Okay, so we want to be selling into it. Cool. Now let's head back into the current price action again and track this narrative. So look, a lot of volume on this sell-off. Again, inducing early sellers. We do not want to sell yet. We want to see price above. And how would I enter this? I'm going to plot this sell tool on right at this high, and I'm going to cover this high from the left-hand side with my stop loss. Okay, we're going to talk about this in a moment. I'm going to drag my target to the target we've already determined, we've been talking about. Just there, perfect. 2 things we're going to talk about here. Why are we entering here? Why is our stop loss covering here? Okay, number 1, why are we entering here? Because since we have taken out this low, we now understand that this high is going to be having liquidity above it. There's going to be liquidity above it nonetheless. Doesn't matter because we've had a big sell-off to the downside, inducing sellers, which means this area, this whole red box that we've drawn on, is going to be a trap. That'll induce liquidity above this high. Simple as that. We like to take entries as soon as liquidity is taken, right? So as soon as this high is taken, liquidity has now been stabbed in the market. It's been liquidated. It's been trapped, whatever you want to call it. Now we're entering at that position. Why is our stop going above this high? Our stop is simply covering this high because look, it's a liquidity block. Remember what we talked about here? We built. Then finally, look what this candle did. This whole area was created because we have ran liquidity. We ran all of this liquidity built at these highs. And then we sold off with lots of volume. So I'm viewing this high right here, guys, to have no liquidity above it. So that's why I'm letting my stop cover it. Okay, think of the logic behind that. Again, rewatch this if it doesn't make a lot of sense. I get a couple questions on the liquidity block. It's actually not too complicated. Liquidity built, liquidity taken, and ran away. So now we can use this area as an entry point. Okay, so we take that entry here, stop loss goes above this high. And you can see with my crosshair, look how we're covering that high. Let's play price action out a bit here. We are now trading at the high. Look at this. This is now going to be an area. Remember, sellers want to be entering positions here or even in here, anywhere in this imbalance. Sellers want to be entering positions. We understand that. So there's going to be liquidity above this high. We're going to put our limit right at this high at 0.66102. And look at the next candle does. Taps us in. Since we've taken out this high, what do we view this as now? Train those eyes, guys. Train those eyes. We've taken out this high. BOS to the upside. Buyers induced. They want to buy the low. Okay, look how we get a slight rejection as well. Next candle comes in. Boom. Taking out those lows. Perfect. Remember where we have our target. Any reactions before this low is taken, deem it to be false. okay? A trap. I'm gonna continue with price action. Look at this, guys. A little bit of a pullback in the market. Again, deem it to be false, because any reactions above the blue line is literally just building liquidity for us. That's it. Inducing buyers, early buyers. And there you go. Look at that sell move we get off the back of that. Ends up moving actually quite a bit more to the downside, but these setups are the ones you guys want to be looking for. Textbook, okay? All the way from building that narrative, building that direction in the market, to taking that entry and then having the most clean target. So this is actually like a bread and butter kind of setup. Please rewatch this video if you guys need to. All right, guys, thanks for watching today's video. I hope you guys enjoyed episode number 6. I'm gonna be recording a lot of these. I wanna get a lot of these videos out. They've been very valuable to a lot of you guys out there. So again, subscribe if you guys have not yet already. Drop a like, leave a comment down below of what you guys thought of the episode, maybe what you guys wanna see in the next coming episodes. We'll talk soon, guys.